now time to put the spotlight on the theme of the day, that is Pharma Pack. It is in focus as the sector has gained on US tariff tailwinds. Varsha joins us with more details on that. Varsha?
Thank you for that. So, if you see, pharma is the sector of the day. Now, this is on the back of Bank of America, which has came out with a report and their view on potential impact of tariffs on Indian pharmaceutical companies. So, what they are saying is that the report analyzes the potential impact of tariffs imposed by Trump on pharmaceutical companies. Now, tariff, what they are saying is a 25% tariff is considered unlikely due to US reliance on imported generics and the low profit margin of the manufacturers, and also a 10% tariff is actually possible according to BOFA, but this effects would be mitigated by whether these companies will pass on the increased tariffs, the increased cost to the consumers and the distributors, and also the shifting of profitability of US generics business to US subsidiaries. These are the two potential scenarios that may come out when 10% of tariff is impacted. Now, what they are saying is that the tariff could lead to high generic drug prices and potential shortages, which will eventually lead to a good and favorable environment when it comes to Indian pharmaceutical companies. And they do come out, they do have a recommendation wherein, given the potential for market volatility, the report recommends investing in defensive healthcare companies, like they have a buy rating on Apollo Hospitals as due to its stable earnings. They are also bullish on Divi's Labs because of the lower impact when it comes to US business, and also they are also recommending Dr. Reddy's for its ex-US growth potential.
Right. Varsha, I think you've done more analysis on this. Tell us which pharma companies have the most US exposure and the impact of earnings per share on those companies.
Well, if you see, let's just highlight Aurobindo Pharma, which has almost 46% of business coming from US. Then you have Cipla, where 28% comes from the US. But if you see the Dr. Reddy's, almost 46% of the business comes from the US. And because of the BOFA report, wherein they are not seeing much impact of tariffs, this is the reason why, if you see, the Dr. Reddy's is up almost 3% in trade today. If you see, the Torrent Pharma has the least exposure to US business, that is 10%. But also, there was this HSBC report wherein they came out with, if the 10% tariff is to be implemented, what will be the impact on that will be on the EPS of these companies. So, if I were to talk about Aurobindo Pharma, will have an impact of almost 5.5% of EPS to its 5.5% impact of EPS. If you see the Lupin will have almost 4.5% impact on its EPS. Dr. Reddy's will have almost 6.5% of impact on its EPS. And Zydus, if I were to talk about Zydus will have almost 6% impact on its EPS. So, these are the potential US contribution of these Indian pharma companies and their impact on the EPS of these companies.
Right, Varsha, thank you so much for breaking that down for us. Mr. Chokalingam, I'll come to you. How are you reading this entire tariff imposition on these pharma companies, and which of these pharma companies do you think will still stand out for you, and you'll continue to see an upside potential in one of those stocks?
Yeah, very interesting question. US economy already at the receiving end ever since Trump has initiated aggressive measures in terms of trade war. The job layoffs have increased, consumer sentiments have come down, consumer inflation also has come down, partly due to the rising deflationary conditions. Stock market has given up all the gains in the US, and dollar index is down close to 6%. So what it means is that there is a limit to the intensity of trade war, and particularly for pharma, it will have a more adverse impact on the US economy. For people, living cost would increase. So therefore, I agree that there may be only a marginal hike in the tariff. So I would prefer Dr. Reddy, because a lot of acquisitions and marketing tie-ups have been executed in the last 10, 12 months, and also the stock has fallen a lot. And apart from that, Dr. Reddy has around 45% of the exposure to domestic market, which would remain stable. And secondly, I would continue to recommend aggressive focus on domestic pharma companies, which have got the least exposure to American economy. or American markets rather. So that would be FDC Limited. 82% of sales are from the domestic markets. So that gives me a lot of confidence and comfort. And just as a disclosure, we also personally invested in FDC Limited.
All right, so that's the view coming in on pharma companies from Mr. Choklingan. Siddharth, I'll come to you as well. Any of these pharma companies that you are finding attractive? I recently come across a report from Goldman Sachs, if I'm not wrong, and there they had Torrent Pharma as well as Aurobindo as their picks. But how are you looking at the entire space, and what are your picks?
No, definitely, Mahima. I think it's an interesting sector and especially a lot of things going on. At the core, we also believe that it is unlikely that the US will put in a lot of tariffs on the healthcare products because that is one space where they are struggling. And India is one of the niche countries where they are getting a lot of pharma supply. So they would not want to increase the healthcare expenditure at this juncture. So unlikely that we'll see a 25% tariffs on Indian pharma players. Nonetheless, if you look at segment wise, US generics, we are not that positive. Among the list, Sun Pharma is the only one which we like among the generic players. It is a preferred pick. It has a much more diversified presence across geographies. Plus, the India business also is doing well. The second space is the CDMO space where we like the likes of DVs, which is a much preferred player, safer and better player. Growth is pretty strong. The regulatory hurdles are less. And again, we see strong growth in that segment. So DVs is the second player. And the third segment is the domestic market. And I agree with Choka sir about Indian players being much more resilient in this global turmoil. So our pick there is Mankind Pharma. Almost 97% business comes from the Indian markets. Plus the recent acquisition of Bharat Serum, that also kind of is very positive for the long-term growth. We see consistently almost 30% earnings growth in Mankind for the next 2-3 years. Plus decent, comfortable valuation makes it an attractive buy at current levels.